Everybody, it's Chuck Barone. Friday, June the 30th, 2023. Let's wrap up a week. Let's wrap up a month. Let's wrap up a quarter. Today is the end of the second quarter. An interesting day. A lot of stuff happening in these markets, guys. It is some crazy times going ahead. Of course, I had to get flamed yesterday a little bit for, not being the doomsayer. I guess it's amazing to me. Some people, they watch these videos, they actually get upset if, the report is not a total piece of crap negative or makes the government or a political party or somebody look like crap. Look, guys, the numbers the government releases are the numbers we get. I don't get to determine that, okay? And if the government would lie about every single report and every single detail of every report, why on earth would there ever be a negative one? The ones you guys cheer, yay. So it's, it's like the negative stuff, they're lying, it's not negative enough. The positive stuff, they're lying, it's not negative enough. Look, the numbers that I talk about on this show are the numbers that Wall Street uses to compute PE ratios, to compute, everything on Wall Street, how investors react and respond to everything. So it's probably most prudent to use those numbers. I mean, have you really made any money from the stuff you're getting on Shadow Stats, man? Anyway, a lot of guys very clever. Here's what I know. If you had just put a simple amount of money into an S&P index fund and left it there from January 1st till today, you got more than a 15% gain. How many guys are making 15% every 6 months? Are you? So maybe, it's time to revise your own approach to things and your own way of thinking. Not everything can be a negative. Sorry. All right, let's talk about these markets today. Today we got the government numbers. We were expecting some information. We did get it on the PCE, the government preferred inflationary index, coming in, well, not great, giving the market reason to be happy today. We also got consumer spending numbers, which kind of went the Fed's way as well. So all in all, a good day for the markets, as everything pretty much went up today. And a good day for the Federal Reserve, as it shows again that the plan that they've put in place and the things they're doing, maybe not fast enough, maybe not quick enough or deep enough or to anybody's satisfaction, but the things they're doing are working, right? So let's look at the numbers. The Dow today up 285 points, a nice rocking day for the Dow. 34,407 on the Dow Industrials. Great day for the Dow. Good day for the stock market. S&P broader market up 53 points. 4450 on the S&P. The Nasdaq up 196 points. 13,787. So while these are not wow earth-moving numbers, pretty good numbers over the last couple of days for the markets. Now it's still kind of trading a little bit sideways. It's not really a big breakout of any kind. But it's nice to see, in the face of all the negativity we've dealt with over the past year and a half, to see these stock markets holding up, to see every market holding up pretty much, except the bond market. Bonds today, segue real quick, a very weird day in the bond market, mixed day today. When the numbers first came out, the PCE numbers, bond market kind of spiked a second, came back down to earth, finishing, so the finish pretty, nothing conclusive. The 10-year note drops 3 basis points, 3.82% on the 10-year. The 2-year jumps 3 basis points, 4.90, 4.9 on a 2-year. So the inversion getting a little bit deeper. Now you're up to 108 basis points. The deepest I can remember this particular inversion being, I want to say, was around 114 last summer. So, this inversion, obviously a warning that a recession is coming. Okay? And as I've been explaining here, this is kind of a weird one, so get this one. Every recession since, I guess, around 1950 has been preceded by an inverted yield curve. Okay, so every time there's been a recession over the past, say, 70 or 60 years, it's been preceded by a yield curve that looks like this one. However, every time the yield curve has inverted, like it is now, it has not been a 100% indicator of a recession to follow. So while every recession is preceded by this, this is not a 100% predictor of a recession to come, as evidenced by the 2 consecutive quarters of negative GDP we had last year, leading to no recession. So bond market kind of uncertain. It's mind-blowing to me. I mean, 4.9 at a rate for a 2-year deal seems pretty fair to me. You're getting almost that rate, however, in money markets and savings accounts these days if you shop around. So it's nice, something finally happening for savers where, if you're putting some money away, you're actually getting a return more than, a cup of coffee a year on your savings. The dollar today, down small, but not a big worth moving day. But the news of the dollar is it did dip back under 103, 102.92 on the index. Still a very strong number, but showing that there's not a lot of support for the dollar above 103. Let's see if we can get back above and stay there, or where it heads from here, but still a very strong number for the dollar. Metals today on a weaker dollar rally. Gold up $11.70, $1,919.80 for an ounce of gold. Silver up 22 cents, $22.75 for an ounce of silver. So these numbers, while not exactly where I was thinking or hoping they would be at this point, still very strong numbers in the face of a very strong dollar and some headwinds. Oil today, up very small, up 58 cents. $70.44 for a barrel of West Texas Intermediate. This is exactly what we predicted would happen, as we've been saying pretty much every day on the show when we talk about oil. It seems like oil or crude has been most comfortable trading between $70 and $75 a barrel. It does break out from time to time on news or some data point above the 75 or below the 70, but over the past year or so, it's been real quick to get right back in that trough, right where we are today, $70.44. Bitcoin today down very small, down $21, $30,396 for Bitcoin. I was reading a little bit about it in the Wall Street Journal today. They were saying that, this latest run-up in Bitcoin has been on, the news of these Bitcoin exchange traded funds that are being proposed. The SEC a little bit resistant right now. There has to be special warnings about the volatility and risk involved, but it looks like this will come to pass. And when it does, well, that's just going to be a great thing for Bitcoin and Bitcoin holders. Okay, so let's talk about news we got today, because there was a lot. Well, not a lot of news, but a lot of impact on the news. So first news. PCE numbers, which is the Federal Reserve's preferred gauge, what they're looking at as far as how they measure inflation. In their mind, a better number than our CPI or our PPI numbers. So it comes in today better than expected. Go figure. So the top line coming in at 3.8% year over year versus 4% last month and 4% expected again this month. So we got a little bit of a better number for top line inflation. And the second number, the core number, that one came in at 4.6% year over year, down from 4.7% last month. And they were expecting that same 4.7% this month. So while not dramatically better, okay, still continuing the trend down. 3.8% on this index is the lowest it's been for quite some time, about a year or so. I think last March was the last time it was this low. So again, more evidence that what the Fed's doing is working. Maybe not as quick as we would like, right? But certainly bringing these numbers down. Now, while the news on the inflation numbers is good, I tell you guys, I don't think it's enough to prevent the Fed from going ahead and raising rates again at the end of July. That'll get us up. We'll get another quarter point there. That'll take us up to about 5.35% on the overnight rate. Very interesting to see now the strategy here, because Wall Street's betting, economists and Wall Street people who actually bet money on the stuff have a difference of opinion. Wall Street betting this July increase that's coming will be the last. Economists saying there likely will be a second increase sometime before the end of the year. Powell himself has implied there will be 2 more increases. Had said it pretty much is the consensus of the governing body. So we'll see where it goes, but still expect that bump to come in July. We'll see how the numbers look after that bump, if they can continue this inflation numbers heading back down toward their target. You know, you can see though, the way these numbers are barely moving from month to month, even when they're moving in the right direction, it's going to take them some time with higher rates to get these numbers to a target of 2%, right? Consumer spending report also came in today. This one is also good news for the Fed, because it was it was sharply, is that a right word? It was, not a collapse, but it was dramatically less than it was last month. Last month, the number coming in 7% year-over-year consumer spending growth. This month coming in less than 1.5% year-over-year growth. So last month consumers spend it up. This month, not so much. Now, what was interesting about this was yesterday I was reading that the durable goods orders were up. Planes and cars were the ones leading the charge. Today I was reading consumer spending was down because people aren't buying cars. Go figure, guys. Anyway, the second quarter comes to a close, and while inflation numbers are still not good, the mood in the country, especially regarding economics, is particularly sour and angry. Here's some stuff that we got to look at and are the truth. The stock market is up very nicely over the first 6 months, with NASDAQ up over 30%, guys. S&P up over 15%. Employment, well, not exactly perfect, hanging very tough, with an unemployment rate of about 3.6%. Wage gains, finally, higher than the gains, the jumps in inflation. Wage gains standing at 4.3%, inflation at now 3.8%. So we finally have people making enough money to at least cover the additional costs brought on by inflation, right? Inflation numbers continuing to come down, although not at the pace we certainly would like. Now, at the risk of pissing off half my audience, my friends who like to flame me in the context section, calling me a liberal or naive or drinking the Kool-Aid, or comparing me to Dave Ramsey, or some other guy, I don't know. But let's just give credit where it's due here, guys. Okay? The Fed did a pretty abrupt about-face, right? A complete 180 from seriously accommodating to tight, man. I mean, this kind of move is not what you see central banks typically do. So they went from super accommodating 0% rates to super tight pretty much instantly, raising with a 500 basis point series of increases. Now, they did face some pretty serious political headwinds. Certainly got a bunch of crap from the real estate lobbyists and a lot of different businesses across the country. But Powell, love the guy or hate him, has basically telegraphed every single thing he said they were going to do, and has done it. And it has all worked pretty much according to plan. Now, don't get mad at me, okay? This is just the numbers that we get every day. Now, granted, these numbers could be a little fudged. Do I think that everything that the government reports is outright fraud and a complete, load of crap? I doubt it. So, there's a little bit of reason for optimism, guys. So I'm not saying this to change anybody's mindset. I just would like you to not have as much stress as maybe you're having over finance, over the state of the economy, over the state of the country. Because everybody wanting to paint a very, very bleak picture, but the data does not support that picture. It is what it is, man. I don't create the data, I just report it. And I bring you this news to use as you want. Okay? Anyway, that's it for the day. That's it for the week. That's it for the month. That's it for the quarter, guys. Go have a super awesome weekend. We will be here on Monday to do a short video. The markets are open very briefly on Monday. I got a few comments I want to get out. We'll not be doing a video on Tuesday. We'll be back normal hours and normal everything on Wednesday. Have a great weekend. Relax. Enjoy your time off, your family. Know that better days are coming, guys. We'll see you again on Monday. Until then, take care. Thanks.